All right, let's take a look at more markets numbers now. We'll start in Europe. The FTSE climbing 2.1%. In Europe, the CAC and the DAX jumping 3.3%. Here at the JSE, the all-share index 1.3% firmer, industrials 1.4% higher, and financials 1.3% up. The resources index advancing 1.1%, the gold index 1.7% higher, the platinum index 2.2% stronger. All right, so here's your price of gold at the moment, $1,133 an ounce, platinum $915 an ounce, and your Brent crude oil price $48.26 a barrel. The rand against all the major currencies, against the US dollar 13.57, 20.63 against the British pound, and 13 rand 29 cents against the euro. All right, so before we take a look to our analyst is just a quick look at what the BRICS currencies are doing. All right, so analyst Nadir Token from 27/4 Investments joins us now to talk about some of those developments. Nadir, thanks for coming in.
Always a pleasure.
All right, let's of course start with what the markets are really being influenced with today. It's always the US payroll data on the Monday after it's announced on the Friday. No exception today.
Absolutely, Devin. So, we see a disappointing top-line number of 142,000 jobs created. So the unemployment rate stayed static at 5.1%, as it has for the last couple of months. But the difference between the last couple of months and the last two jobs report is that the top-line number was much, much better. So we saw, in excess of 200,000 jobs being added consistently. The last 2 months, that's obviously slowed down a little bit. So, we've seen Janet Yellen come out repeatedly and said that, the US economy has got to brace itself for higher interest rates as the interest rates increase gradually as the Federal Open Market Committee begins increasing. And she's mentioned that, it's got to be gradual, otherwise later it's got to be a very abrupt tightening of monetary policy, and that might shock the economy somewhat, and we may have to see the Federal Reserve then embark on interest rate cuts again. But, the latest data seems to suggest that there's still plenty of slack in the US economy, with the jobs market slowing down a little bit. And we all know about that participation rate. The participation rate, there's much talk about it being at all-time lows, and with the participation rate at all-time lows, the top-line number looking not that great. The market is starting to forecast that an October rate hike is very, very unlikely, with about a 10% probability put to that. And the proverbial punch bowl of the Fed remains there. And that's why we see risk assets rally aggressively. We see equity markets across the globe are up firmly. We see emerging market currencies are rallying, the rand coming below 13.60 to the dollar. So broadly speaking, we're seeing strong risk on sentiment and risk assets benefiting handsomely off of the back of that, on the back of expectations for the Federal Reserve to keep interest rates on hold.
And I want to talk about the rand. I mean, if I understand it, it's about the 5th consecutive day that the rand has gained. So that rand, some interesting developments on the rand as a result of that payroll data.
Yeah, absolutely, Devin. I mean, like you mentioned, it's a market-moving number, and we all know that the rand is a great gauge for where risk sentiment is in the world. And the reason for that is that the rand is such a liquid emerging market currency. So foreigners know that they can get into and out of our financial instruments relatively easy compared to, some of the other emerging markets. So when there's strong risk on appetite and investors are looking for additional yield, they seem to be pouring money into our economy, be it through the stock market or through the bond markets, through our financial markets. And when there's risk-off sentiment, when there's expectations of weak data out of the developed market, or expectations that interest rates in the developed market are going to rise, we see a strong reversal in that trend. Now, the last couple of days have obviously been an indication that, maybe economic growth is not as rosy as what people may believe in the US economy. And, there's certainly no inflation to speak of in the European economy, with stimulus being ramped up, in fact, by the ECB, and them and Mario Draghi of the ECB standing ready to pump more quantitative easing into the system should the need arise. So zero inflation in the developed world and interest rates on hold for now is really seeing the rand rally off multi-year lows.
Okay, so I sat here last week and we were speaking about Glencore having a 25% knock on its share price. You get up this morning and you see it's gone up by 20%. What happened here?
Yeah, look, I mean, it probably had reached oversold territory.
Yeah.
You know, there's a lot of concern about the debt on that company's balance sheet, and investors concerned that, you know, they need to plug a hole in their balance sheet because of the amount of debt they've taken on. Now, you know, that obviously means that they're going to have to go back to shareholders to put their hand in their pocket.
Yeah.
You know, but the company has some very big blue chip shareholders. You know, one thinks of the Qatari Sovereign Wealth Fund, and, you know, the likes of those kind of wealth funds, you know, having a substantial stake in the company. One has to believe that should the need arise for more capital, you know, it would come. So the market's saying, well, poor numbers came out of China. Glencore is very, very exposed to the Chinese growth story, particularly growth in investment. And on the back of those poor numbers coming out, the share sold off. You know, the market then saying, well, it's probably sold off a little bit too aggressively, and we saw it consolidating some of those losses. Where we saw broad-based losses across the resource sector, it was particularly severe in Glencore. So really just a technical bounce on the back of probably reaching oversold territory.
And then, Nadir, before you go, I mean, I see Trade and Industry Minister Rob Davis here hinting at the weekend that a settlement in the steel industry and the standoff over there almost imminent. Of course, it revolves around the entire idea of protection, doesn't it? You think we can see some resolve coming soon?
Well, I think, you know, we're at a point where everybody's got to reach a point of compromise. You know, I think the bottom line is that these workers deserve to be paid more, but the companies can't afford to pay them more, which is the unfortunate reality of the situation. But I think what's happening with Labour, particularly now, is that they're realizing, well, you know, if we don't sort of cut back on what we're demanding, you know, we may see permanent supply destruction. We may see factories and mines permanently closed down, and those jobs permanently lost. So, you know, I think everybody should gather around the negotiating table, certainly with the coal strike that's imminent and the knock-on impact that's going to have on, first of all, electricity supply, and second of all, on, you know, jobs in that sector, given that the companies are waning to the extent that they are. You know, I think a bit of rationale has to prevail, and people have to realize, Labour in particular has to realize that, you know, without some sort of consolidation in the sector, you know, we could see permanent job losses. So, you know, demands need to be tempered a little bit, and companies need to come to the party as well.
We're going to leave it there. Nadir Token from 27 for Investments. Thanks indeed for coming in.
100%. Thanks for the time.